Hello there. You are welcome to today's update from our stores to you. Gold continues to stand as one of the most valued assets on Earth due to its widespread use as a main currency and in the purchase of high-value goods in both trade and world markets. This time, it isn't just about gold being used to make high-value assets like currencies, but also how much gold could surge this season until the end of 2024 as we see a rise in weddings featuring gold in India. Several leading investment banks, including Goldman Sachs, UBS, and JP Morgan, have predicted a bull run from now until 2025. This prediction is based on the 3.5 million weddings scheduled in India. Goldman Sachs recently published a report forecasting that gold prices could hit $3,000 in 2025. Retail investors in India, institutional funds, and central banks of emerging economies have been heavily accumulating gold since 2022. The precious metal has surged nearly 28% year-to-date and is among the top-performing assets in the commodity markets. The Confederation of All India Traders, C8, published data showing that Indians could spend $66.4 billion in the coming wedding season. Gold could be a top priority in India, aligning with both cultural and investment purposes. Sectors such as retail, hospitality, jewelry, and automobiles are seeing substantial benefits from this increased demand. Contributing factors include economic stability, low inflation, supportive government policies, and evolving consumer preferences, the findings showed. More than 3.5 million weddings in India could push gold prices higher in November and December. Gold is an essential feature of weddings in India. No wedding occurs without its presence, as brides and grooms are adorned in gold, whether it's a simple chain, ring, earrings, or bracelets. Gold prices have been skyrocketing this month, hitting a high of $2,637 during Tuesday's opening. The precious metal surged nearly double digits on the charts, attracting heavy bullish sentiments. INS reported that around 3.5 million weddings are set to take place from November to December 2024 in India. As families go on a buying spree, the purchase of gold could peak across the country, pushing prices even higher in the coming months. Retail investors in India, institutional funds, and central banks of emerging economies have been accumulating gold since 2022. The precious metal has surged nearly 28% year-to-date and is among the top-performing assets in the commodity markets. The Confederation of All India Traders, CIT, published data showing that Indians could spend $66.4 billion in the upcoming wedding season. Gold could top the list due to its cultural and investment value. Sectors such as retail, hospitality, jewelry, and automobiles are seeing substantial benefits from this increased demand. Contributing factors include economic stability, low inflation, supportive government policies, and evolving consumer preferences, the findings revealed. India is gearing up for more than 3.5 million weddings from November to mid-December this year, projected to result in a massive expenditure of 4.25 lakh crore. The country sees approximately 10 million weddings each year, making the wedding industry the second largest in the world. According to reports, the sector is the fourth largest industry in India, with annual spending reaching $130 billion and creating millions of jobs. From January 15 to July 15, 2024, India saw more than 4.2 million weddings, resulting in an estimated expenditure of $66.4 billion, Rs 5.5 lakh crore, according to a survey by Kate. Prabhadas Liladher, in its latest report, stated that a recent cut in gold import duties from 15% to 6% is anticipated to lead to a notable rise in gold purchases nationwide, especially during the upcoming festive and wedding seasons. Given gold's cultural and religious importance, along with its status as a valuable investment, this reduction is expected to significantly boost demand, the report noted. The report further mentioned that the stock market frequently sees a boost during the festive and wedding seasons, driven by heightened consumer spending. Sectors such as retail, hospitality, jewelry, and automobiles see substantial benefits from this increased demand. Contributing factors include economic stability, low inflation, supportive government policies, and evolving consumer preferences, the findings showed. While the impact may differ across sectors, the overall effect on the Indian economy is positive. The report highlighted that higher spending on premium goods and services, such as airlines and hotels, boosts revenue. This increased demand enhances profit margins and drives stock prices higher, supporting overall economic growth. Meanwhile, the government also plans to promote India as a top destination for international weddings to tap into 1 lakh crore that is currently spent on destination weddings abroad. Gold prices have soared to new heights this year and are expected to climb into early 2025, reaching new record highs, according to Goldman Sachs research. The precious metal has increased more than 20% this year, peaking at a record of more than $2,500 per troy ounce. Goldman Sachs research forecasts the price will reach $2,700 by early next year, supported by interest rate cuts by the Federal Reserve and gold purchases by emerging market central banks. Additional boosts could come if the U.S. imposes new financial sanctions or if concerns about the U.S. debt burden increase. Gold is our strategists' preferred near-term long position and is also their preferred hedge against geopolitical and financial risks. In this softer cyclical environment, gold stands out as the commodity where we have the highest confidence in near-term upside. Goldman Sachs research strategists Samantha Dart and Lena Thomas write, they point to 3 factors in particular that could push gold prices higher. 1. Central bank purchases. Since Russia's invasion of Ukraine in 2022, central banks have been buying gold at a brisk pace, roughly triple the amount prior. Goldman Sachs research expects the buying spree to persist amid concerns about U.S. financial sanctions and the growing U.S. sovereign debt burden. 2. Fed rate cuts. Higher interest rates tend to make gold, which doesn't offer a yield, less attractive to investors. Rate cuts by the Fed will likely bring Western investors back into the gold market after largely being absent during the metal's sharp rally over the past 2 years. 3. Potential geopolitical shocks. Gold offers significant value as a portfolio hedge against developments such as tariffs, Fed subordination risk, i.e., the risk that its independence may be undermined, and debt sustainability fears. Our researchers see roughly 15% upside in gold prices under a rise in financial sanctions equal to the rise seen since 2021, and similar gains if mounting debt concerns spur U.S. government credit default swap spreads, a measure of creditworthiness, to widen by 1 standard deviation. Investors may need to be more selective when investing in other commodities, given softening in the global economy, according to Goldman Sachs research. With major festivals around the corner, demand for gold has risen as jewelers keep their inventories to meet consumer demand. Factors such as the reduction in global gold prices and anticipated high demand during the festival season have led to a rise in gold imports, the Commerce Secretary said. Also, due to lower tariffs, imports of precious metals are now being properly accounted for, which were previously coming from various unreported sources. This is also contributing to the rise in export figures. Also read what the gold rally says about market uncertainty. Mint on the 28th July reported that the sharp reduction in import duties on gold and silver would help check gold smuggling. Given that gold is a primary raw material for the gems and jewelry sector, the duty cut can also unlock blocked funds, as businesses are required to pay the duty up front and can realize the sale value only after production. Vipul Shah, chairman of the Gems and Jewelry Export Promotion Council, said while gold imports had surged month on month in terms of value due to the lower duty and the upcoming festival season, there was no surge in terms of quantity. Total gold imports from April to August was 315 tons, slightly down from the 318 tons imported during the same period last year, Shah told Mint over the phone. Thanks for stopping by. Hope you found this video interesting. Do stick around for more and related updates right here at our channel. Do not forget to like, share, and subscribe as a means of supporting what we do. Goodbye for now.